Shares on Wall Street took a breather on Friday after a tech-driven rally, and U.S. Treasury yields rose to fresh heights as markets evaluated a world of elevated interest rates and the effects of Russia's war in Ukraine. The S&P 500 financials sector gave the biggest boost, while tech was its biggest drag. For the week, the S&P 500 and Nasdaq registered gains, and the Dow was close to flat. Investors are assessing how aggressive the Federal Reserve will be as it tightens policy after Fed Chair Jerome Powell this week said that the central bank needed to move expeditiously to combat inflation and raised the possibility of a 50 basis point hike in rates in May. Julian Koski, co-founder and chief investment officer of New Age Alpha, wonders if the Fed is being aggressive enough.
I don't know. To the extent that the Fed is always late to the game, that's possibly what has happened again now. But again, as an investor, what do you do about it, right? There's not much you can do about it. You have to go back to the basics of investing. What does the individual company I'm looking at look like based on this? And I would say, I think there's a lot of buying opportunities because most people react negatively to interest rate changes.
The Nasdaq fell about 0.16% as technology and healthcare stocks pulled back, while the Dow and S&P 500 edged up about 0.5%. With energy and financial shares rising on oil price gains and bets on interest rate hikes by the Federal Reserve. Oil prices turned positive on Friday after reports of a missile strike and a fire at Saudi Arabia's state-run oil company Aramco's facility. Shares of growth companies like Microsoft and Nvidia Corp eased after leading a Wall Street rebound this week. Shares of Wells Fargo gained. The Ukraine-Russia conflict will keep investors on edge over the weekend. Moscow signaled it was scaling back its ambitions in Ukraine to focus on territory claimed by Russian-backed separatists.